again, welcome back to Anu's Learning Zone. This is part 2 video of basic accounting in which we are going to discuss about the debit and credit rule of accounting. Okay, so without wasting much time, let's move on to the rule of debit and credit. In the last video, where we discussed about the terms related to accounts, the first term that we discussed over there was transactions. At that time, I said that in every transactions there will be at least of two accounts, and one will be having a debit aspect, another will be having the credit aspect. So whenever we get a transaction to record, the first and foremost thing that we needed to do is to identify the accounts and then its debit as well as the credit aspect. Okay, so in order to identify that, we need to follow some rules, and these rules are based on some approaches. Okay, basically there are two approaches that explains the rule of debit and credit. The first one is the traditional approach, which is also known as the golden rule of accounting, and the second approach is the modern approach. Okay, so let's see what the rule of debit and credit related to the traditional approach. Okay, so under this approach, there are three major accounts. That is, the first one is the real account, which deals with all the assets of the company, and the second one is the personal account, which deals with the persons or the individuals, and the third one is nominal account, which deals with all expenses, income, loss, gain of a company. Okay, and for all the three accounts, there are separate rules related to it. So let us begin with real account. Okay, so real account deals with the assets, that is both the current and the fixed asset of the company. And according to this, the rule is debit what comes into the business and credit what goes out of the business. So let us explain the same with the help of an example. So the example which is given over here is purchased building worth rupees 10 lakh. So whenever we get a transaction, the first and foremost thing is we need to identify, or we need to think from the point of view of the company. Okay, so in the next step, we have to identify the accounts that is there in the transaction. So according to the given example, the two accounts that is there in the transaction is cash account and building account. So the reason is, whenever we purchase an asset, we need to record the transaction in the name of that particular asset. So that is the reason why we choose one of the account as a building account. And the second one, why we choose cash account. If in the transaction, if it is not mentioned as a credit purchase, or if it doesn't mention any name of the suppliers, we need to assume or consider the purchase as a cash purchase. That is the reason why we took the second account as a cash account. Okay, so therefore the two accounts that comes from this particular transaction is building account, which belongs to real account, as well as cash account, again which belongs to what? Real account. Okay, so in the next step, we need to check the rule, that is we need to check what comes into the business and what goes out of the business. So according to the given transaction, here the cash goes out of the company to buy the building, and as a result, building comes into the business. So therefore the debit aspect have to be given to the building account, because it comes into the business. So the rule itself says we have to debit the account what comes into the business. So here it is, building comes into the business, so we have to debit the building account, and what goes out of the business, cash goes out of the business. The asset named cash goes out of the business in order to purchase the building. Okay, so we have to credit the cash account. Moving on to the next type, that is the personal account. Okay, so as the name suggests, it is related with the persons or individuals, and the rule says that we have to debit the receiver and we have to credit the giver. Okay, so let us explain further with the example, with the help of an example. The example which is given over there is rupees 10,000 received from Mr. Raju. So here also we have to think from the point of view of the company. Okay, always when we get a transaction, we have to think from the point of view of the company. So rupees 10,000 received from Raju means the company received rupees 10,000 from Mr. Raju. Okay, so from this given transaction we have to identify the two accounts. So the first account will be Mr. Raju account and the second will be the cash account. So here Mr. Raju account can be considered as a personal account because he is an individual or he is a person. And when we think about cash account, it is an asset to the business, so it belongs to a real account. Okay, so here it comes the combination of both the real account as well as the personal account. So so that we need to follow the rule of real account to give the debit or credit aspect to cash account, and we need to follow the rule of personal account to give the debit or credit aspect to Mr. Raju's account. Okay, so let us consider Raju's account first. So according to the rule of personal account, we need to credit Mr. Raju account because the rule of personal account says that we have to debit the receiver and credit the giver, right? Credit the giver. So from the example which is given over there, it is very clear that Mr. Raju is a person who gives money to the company. Okay, who gives money to the company. Okay, thus we can do what? We can credit Mr. Raju account because the personal rule of personal account says that we have to credit the giver. Okay, then let's take the cash account next. Okay, so when we look on the cash account, this belongs to real account. So we have to think in the real account, it says that what is the rule of real account? Real account says that debit what comes in, credit what goes out. So what is happening to cash account? Is it coming into the business or goes out of the business? It comes into the business, right? Cash comes into the business. So according to the rule of real account, we have to debit what comes in. So that we have to debit the cash account. Another example is paid rupees 20,000 to Mr. Arjun. So here also we have to think from the point of view of the company, and here the two accounts that comes as cash account and the Mr. Arjun account. Okay, so here cash account is a real account and whereas Mr. Arjun account is a personal account. So again it comes the combination of real account and personal account. So here cash goes out of the business. Here cash goes out of the business in the sense paid rupees 20,000 to Mr. Arjun means company paid rupees 20,000 to Mr. Arjun. Okay, so from the company cash is going out of the business. So we have to credit cash account. We have to credit cash account. And when we think about Mr. Arjun, so Mr. Arjun is the person who receives the cash from the company, right? Who receives the cash from the company. So according to the personal account, rule of personal account, you have to debit the receiver. So here Arjun is the receiver. So we have to debit Arjun account and the journal entry becomes Arjun account added to cash account. Okay. Moving on to the third account, that is the nominal account, which explains or which deals with the income, expense, gain and losses of a business. Okay. So the rule related to this is debit all expenses and losses and credit all incomes and gains. So let us explain with the help of an example. Paid telephone bill rupees 2,000. Paid telephone bill 2,000. So here also we have to think from the point of view of the company. So the term paid indicates that an expense that is related to a company. Okay. Paid something, paid electricity bill, paid telephone bill, paid rent, paid commission. Everything belongs to what? The expense to the business. Okay. So here the name of expense met by the company is telephone bill and it was paid in the form of cash. Okay. So cash account and telephone bill account, that will be the two accounts that comes from this transaction. Okay. So cash is an asset, so it belongs to real account, and telephone bill is an expense, so that it belongs to nominal account. Let's look on the cash account first. So cash goes out of the business, right? In order to pay the expense or in order to meet the expense, cash goes out of the business. So according to the rule of real account, we need to credit what goes out. Okay. Thus, we have to credit the cash account. Okay. And this was made to pay the telephone bill, which is an expense to the business. So according to the rule of nominal account, all the expenses and losses that is incurred by the business have to be debited. So that we have to debit the telephone bill account. Okay. So the journal entry becomes telephone bill account debtor to cash account. So this can be used. This same method can be used to record all the expenses that is incurred by the company. Okay. Moving on to the another example. Received bank interest on investment rupees 2000. Here also we have to think from the point of view of the company. Okay. So the term received indicates that what comes into the business in the form of money, like received rent, received commission, received discount, okay, received interest on investment. This all considered as a income to the company. Okay. So the two accounts that obtained from this transaction is bank interest account and cash account. Here bank interest account is the nominal account, whereas cash account is considered as the real account. Okay. So here we need to credit the bank interest account because bank gives interest to the company. That means the bank interest is an income to the company. So we, according to the nominal account, the rule says that we have to credit all incomes and gains. So bank interest is an income to the company, so that we have to credit the bank interest account. And in the form of bank interest, cash comes into the business. So according to the rule of real account, we have to debit all things that comes into the business. So here cash comes into the business, so that we have to debit the cash account, and the journal entry becomes cash account debtor to bank interest account. So this is the explanation that is related with all the three accounts, that is real account, personal account and nominal account. So by this we have come to the end of today's class. We will discuss the modern approach in the next class, along with the some of the examples related to how to pause the journal entries in the book of journals. Okay. So with this we conclude today's video. If you have any doubts, you can ask me through the comment section. Thank you for watching.